And now, live from the studios of Freedom's Phoenix, Ernest Hancock.
Welcome back to Declare Your Independence with me, Ernest Hancock, and my good friend Glenn Jacobs, a.k.a. Citizen X. Yeah, we're talking to Citizen X today. Yeah, he's on the road doing his wrestling thing, but I tell you what, the guy's got Austrian economics down, and he has time to study. And I knew if I asked Glenn to, help us out here, he'd give us what for. Well, he has. Just, the one article that I read this morning that he put out talking about the debt and how it's rolling over. I mean, I remember in 92, Ross Perot was in his Can I Finish campaign. He says, look, man, let me show you a chart. You see this? This is long-term debt. They're financing short-term. Let me tell you what happens. Well, his charts and everything was talking about this very thing. And I remember all the gun-grabbing, gun control, Waco, Ruby Ridge militia, assault weapon ban stuff going on in the early mid-'90s. What that was all about was Daddy Bush did read my lips, no new taxes and so on. Well, it was going bad. So what they did is they go, we raising taxes. Well, then the militia craze started and all this patriot stuff, and they did Ruby Ridge and Waco, and all of a sudden, foreign investors start looking at the United States like Chetney or something. They're going, hey, man, your people got a lot of guns, and guess what? They be angry, bow, bow, bow. So what we're going to do is we're just kind of not going to invest with y'all. So they said, no, we got our Negroes under control. They own the slave. They own the plantation. We got the slaves all taken care of. So we're going to disarm them. Well, they can't have, high capacity magazines. So this was all, I didn't realize until the late 90s when they started, different articles were coming out and in Korea and Time magazine version in Korea and the 60-minute version of Japanese television and Japan and all interviewing us because we had Second Amendment is for everyone and it's always Arizona. So when they do the articles or we get the translations and so on of the TV programs and everything, it became clear what the issue was. The whole thing about gun control in the United States was not so much for domestic consumption as it was international consumption, to give them the idea that it was okay to invest in the United States debt, that they had us under. There wasn't going to be a revolution under Daywatch. That's what this whole thing was. It's just a psyop. So now we're going, okay. Is this gun thing going to work this time? I don't think so. They're already, worried about, a lot bigger things. In 1981, 82, around in there, I'm going to show you this chart. The Treasury yield, 30-year Treasury yield, went up to like 15% they were paying for you to buy United States debt. Well, guess what? It's 30 years later and all these come due. Now they're going to have to roll over this debt. Well, that's what Glenn's going to talk to us about. Glenn, help me out, man. How are they going to finance? Everybody's going to say, "Oh, we think the United States is going to be worth it." I mean, what's going on?
I don't know, man. The advantage that the dollar has currently is just the fact that it's the least worst out of everything out there. Who knows how much longer that's gonna hold together? The Chinese are trying to get out of the dollar. They're negotiating long-term contracts for commodities and natural resources that are in dollars. So what they're trying to do is they're trying to slowly get rid of their dollar while they're getting uranium and gold and silver and copper and all that good stuff, but at the same time not crash the dollar market. But they've been doing that for a little while. And as you said, I mean, I think most people think when they look at the deficit and the debt, of course, the deficit being the amount per year that the government has to borrow, whereas the debt is the cumulative debt of many years. They don't realize, they look at that $1.5 trillion deficit and they think, okay, the Treasury has to auction off $1.5 trillion of debt. That's not true. They've also got to roll over all the debt that they can't pay off. Just the short-term debt alone is about $4 trillion, the one-year debt, because what they did was during the financial crisis, by the Fed printing a lot of money, they were able to put a cap on interest rates, keep them extremely low, below 1%. So they borrowed a bunch of money. So they have $4 trillion now in 1 year debt that has to be rolled over. So the Treasury's actually auctioning off $120 billion of debt per week, $5.5–6 trillion of debt a year. And as you alluded to, with that amount of debt, if the interest rate starts to go up, which it will, because at some point there's a couple factors here. Not only is the fact that people still look at the dollar as a safe haven to some extent, but also the fact that they're scared and they don't want to put money in anything else. Well, now that we're seeing that there's all this news about an economic recovery, blah, 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 whether you buy into that or not, the perception that there is could cause money to go into other places seeking a higher return. That's why we're seeing more inflation overseas, is because the money is going overseas. The dollars that the Fed is printing is going overseas because they see a higher return over there. So anyway, there won't be as much dollars that it has an appetite for U.S. debt. So the interest rate will start climbing up in order for to be more attractive, or the Fed starts printing money to buy the debt.
Well, that's what's going on. They're just buying.
That's already going on. Yeah, that's already going on. That's why we're seeing the price of gold and other commodities shoot through the roof. I was listening to your interview with Charles Goyette the other day, and despite the fact that gold has pulled back somewhat, even though silver now, and I'm more bullish on silver than gold. Silver once again is pushing right at $30 per ounce. Gold is still strongly over $1,300 an ounce, and to me, it's just an opportunity to buy more of this stuff.
More. You know, this is another thing. If I'm going to put my money into U.S. debt for, I don't know, whatever stupid reason I would do that, if I go in and I say, you know what, you're paying, it shot up to 4.7% on a 30-year. So I'm going 4.7. One, I have to believe that the United States is going to be around for 30 years, okay? Two, I have to believe that they're going to pay off their stuff in 30 years. Three, I have to believe that if they're not, I could sell it to some other sucker, before then. And then I'm going, if I'm getting 4-point-something% return on this and the inflation is double, triple, quadruple that, why the heck am I doing this?
Yeah, exactly. And especially since inflation is extremely, the government plays with the numbers. And so the CPI rate isn't reflective of the actual purchasing power of the dollar. You've talked about this in your show before. It's all indexed to Social Security. And what was happening in the 90s was that Social Security, the price index was starting to go up. So they're having to pay more money on Social Security. So they wanted to put a cap on that. So what do? They changed the methodology by which they figured the CPI, the Boskin-Greenspan Commission. And what they did is they said, well, if steaks become too expensive, people will start buying hamburger. And then two, like your computer is more expensive this year, but it has more stuff on it. So it's actually not more expensive, despite the fact that that's just a product of productivity of the market. And they've just manipulated the numbers to the point to where you don't even know what inflation is anymore. And also, of course, you take out the really important stuff like food and energy.
Food and energy. There's no inflation. We just recalculated what it meant.
Right, exactly.
Yeah, you can see where we're going on this. We'll get some more details and help from Glenn Jacobs, Citizen X, when we come back here and declare your independence in just a little bit. Yeah, stay right there. It's going to be a good show.